Hi, I'm Mehdi and welcome to Your Finance TV's Crypto Revolution, where we cover all things crypto and digital assets. I've got a feeling today there might be a few things to talk about, but don't forget, before we get into it, like and subscribe to our content and feel free to drop us a line anytime on any topic. But I know what topics I think people may be coming into us about today. I'm here, as always, with Adam Blumberg, co-founder at Interaxis. Adam, how are you, mate?
I'm doing well today, Mehdi. Today, in our world, in the crypto world, has been a pretty good day.
It's been a little bit of a whippy day, hasn't it? Bitcoin's had a nice little bit of a rally. Not too sure what that's all about, but apparently there was an SEC ruling that might have something to do with it. What was it? It is a bit of a landmark day, really. Grayscale and the SEC have been in a long, drawn out battle. Grayscale brought a suit against the SEC about rejecting their proposal to convert their Bitcoin trust into an ETF. Apparently, it seems that a judge has ruled against the SEC. What are your thoughts on this, Adam? And how about we stage it like this? Let's have a very brief breakdown of what the suit came about, and then let's have a look at the ruling, and then we can look at what the implications are of that ruling. Because
Absolutely.
there's obviously, Bitcoin's had a great day today. Grayscale GBTC has had a great day, but there's still a lot of, I wouldn't say hair on it, but it's not a completely straight path to an ETF yet. So
Right. As with most things we talk about, Mehdi, you and I can probably look back at a video we did 2 years ago where we thought an ETF was going to get approved for sure, and then it didn't, and here we are still talking about it. So a little bit of background, as much as I know. Again, I will preface this by saying I'm not an attorney, so I read the news, much like other people do. I read what a lot of very, very smart attorneys say and try to bring that into my thinking and analysis. But here's kind of what happened. For years, Grayscale has submitted applications to have a Bitcoin spot ETF. And of course, for anyone who doesn't know, we already have Bitcoin futures ETFs, right? Which are ETFs that just trade on the Bitcoin futures, which do not have to hold any Bitcoin at all, which don't settle in Bitcoin. They settle in dollars. We have Bitcoin 2x futures ETFs. We have ETH futures ETFs that have already all been approved and all been trading. Those have all been approved. Grayscale, among, of course, other companies, have been submitting applications for Bitcoin spot ETFs for years because they know there will be a tremendous demand for them. Bitcoin spot ETFs have been approved in Canada, in Europe, various places in Europe and various places in Asia. They just have not been approved here in the US.
And Adam, just to interrupt your conversation, the point here, just briefly, one of the things that I would say, having been in the finance industry for a long time, like yourself, it can be seen that futures ETFs and especially leverage futures ETFs can be seen as a more volatile product than an underlying cash ETF. And this is one of the things that brings question to some of the thoughts behind the SEC's decision to grant one versus the other. So, I didn't mean to
Right.
interrupt there, but
No, no.
just throw that
It's
in.
important, Mehdi, and you and I have talked about the difference between a futures ETF and a spot ETF in the past. And, that's where I said, well, because the futures ETFs, and this is my understanding, because the futures ETFs are based on the futures markets, which are already regulated, the process that they have to go through with the SEC is different than the process of a spot ETF, in which case those that are applying have to also talk about how they're going to custody assets and how there isn't, some sort of manipulation of the markets. So Grayscale, again, among others, have submitted for a spot ETF for years. Now, remember, Grayscale has GBTC, which is the Grayscale Bitcoin Trust, which is a regulated fund, a trust, which allows you and I to go invest in it. And then that trust goes and buys Bitcoin. But it doesn't mean that the price of GBTC necessarily moves exactly in line with Bitcoin. There have been times, especially during big bull runs, when GBTC price has traded at an extreme premium. There have been times like recently where it trades at a discount to spot Bitcoin. And Grayscale notoriously has not allowed for redemptions of GBTC for Bitcoin because they're using that as leverage to try to get a spot ETF approved from the SEC. Now, what this suit specifically is about, again, my understanding is Grayscale actually suing the SEC, saying the reason you gave for denying our last Bitcoin spot ETF application is not valid. We don't agree with that, especially in light of the futures ETFs, leverage futures ETFs that have been approved, because you say there is the opportunity for manipulation. The SEC has said, well, we approve those, but not yours, because those are, already regulated markets. They have said that there, is not necessarily a correlation between futures prices and spot prices. And Grayscale is saying that's all hogwash. If you're going to approve those, you have to approve ours. So that gets us to today, right?
Absolutely.
And what we've seen today is this went before, I believe, the DC Circuit Court of Appeals, which I think is something like the second most important court of appeals in the country. I don't know how we denote those, but second most important court of appeals. It went before 3 judges, and those 3 judges came back unanimously and said, we agree with Grayscale. And what's important to note, a few things that are important to note here. It doesn't mean that the SEC has to approve the application. It just means that the reasoning the SEC gave is not valid. And in the decision, which I assume that you'll link to and others can go check out, it was pretty scathing. It was pretty much a completely anti-SEC. It was, you are being capricious. You are basically just saying you don't want crypto, and you're not giving very good reasons. And your reasoning is kind of the parenting, because I said so, is what this boils down to.
I think the line was the denial of Grayscale's proposal was arbitrary and capricious because the commission failed to explain its different treatment of similar products.
Exactly.
We therefore grant Grayscale's petition and vacate the order.
Exactly. So what this means is the SEC can go back to the application and either decide to approve it or decide to deny it. And if they want to deny it, they just have to have different reasoning. Right. Or now something that they can do is they can go to all those futures ETFs and get rid of them and say these are no longer approved. Right. And then that kind of takes care of it from the SEC's perspective to say, well, we have disapproved or disallowed what you are saying is a similar type of ETF. They can actually do that. The SEC, from what I understand, can appeal. And if they appeal, it either goes to something called en banc, which means they get all 17 judges to listen to it instead of just 3, all 17 judges of the DC Circuit Court of Appeals, or it goes to the Supreme Court. Those are kind of the options for the SEC at this point. Something I think which is important to note is these 3 judges, one was appointed by Barack Obama, one was appointed by Donald Trump, and one was appointed by Jimmy Carter. Yeah, Jimmy Carter in 1980, this judge was appointed. But what it tells us is 3 judges appointed by 3 different presidents at 3 different times, conservative and liberal, all of them on the side of Grayscale. I think that's kind of important in telling. So that's a piece of this. Again, this doesn't say that an ETF will be approved. It doesn't say that the SEC has to. It's another chink in that SEC armor. And we've probably talked about this too, Mehdi. Up until recently, government regulators don't lose court cases. They just don't, right? They don't go to battle unless they're going to win. And generally, the government sides on behalf of the government, right? So this is just another chink in the armor of a court saying, look, you went too far. Right. And now we're seeing more members of Congress calling for Chair Gensler's removal. And I think what it's going to be, and this is just me guessing at this point, is the SEC and Gary Gensler might be seen as a political liability for Democrats coming up in an election year, at which point they might go, you know what? We don't need something like this hanging over us. Let's just either approve what we need to approve from a Bitcoin perspective and other things the SEC is doing, stop overreaching, just chill for a while, stop with your enforcement actions and everything else. They might do that. They might just get rid of him altogether, because there was another enforcement action yesterday, I believe, where 2 of the 5 SEC board members, disapproved or disagreed with the enforcement action. So you have 2 out of 3. If you replace one of those 3, then all of a sudden you get enforcement action, or you get a lack of enforcement actions like the SEC has been doing. So maybe this makes the SEC and Chair Gensler especially a political liability, especially considering the degree to which they've been going after crypto-related companies. But it's in line with what this administration has been doing around crypto. We saw it with the IRS recently. We've seen it with the Fed. We've seen it with reporting. It's very much the government is going to manage all aspects of finances. We're not going to let the free market take over anything. We don't like this innovation if it goes against our ability to always collect taxes, to watch what everyone's doing with their money and such. And the courts are kind of vehemently saying, we're tired of the government overreach.
Well, let's see how this whole plays out with the SEC. But I think that Gary Gensler definitely has a target on his back.
Yeah.
And it might almost be worth, yeah, I don't wish anyone to lose their job or anything, but he may get pushed to save some element of face for the SEC, and he might be utilized as a fall guy because I think it's going to be hard for them to unwind and go back on the futures ETFs, which is obviously a possibility. But I would see that as a less likely scenario, just purely because of the logistics around it, and that would be, I'm sure, that would turn into a massive legal fight that would really go on for a long time.
If the charge of the SEC is to protect investors, and then you get rid of these futures ETFs, which have probably billions of dollars invested in them, how are you helping investors? If you said, look, we approved these before, they were okay, and now all of a sudden they're not, you call into question everything the SEC does, and that's another political liability. Some other things we need to touch on, Mehdi, is we've seen the price of GBTC fly up because if Grayscale does get their ETF approved, what they're going to do is just convert GBTC into that spot ETF, which means now the price is going to mirror the price of Bitcoin, right? GBTC has been trading at a pretty significant discount, and now we're seeing that discount start to get taken up the closer we get to a spot ETF. We also have Coinbase shooting up in value today because Coinbase would be very much involved in spot ETFs, the spot ETF business, either from a custodial standpoint or from what do we call it, information sharing agreement standpoint. Coinbase would be very involved in that. And of course, all of this would likely make the price of crypto go up again. If we are steps closer to a spot ETF, the price goes up, more interest, more people learning about it, more investment there, more kind of approval from the US government, which allows for more of this innovation, right? And of course, with Bitcoin goes ETH, because if a Bitcoin spot ETF gets approved, and ETH wouldn't be that far behind. And so you just see this kind of cascading effect, this time in a positive way, not in a negative way that we've seen so much recently. In a positive way, this cascading effect of one little ruling has a huge potential implication. So that's a lot of what we've already seen today. Is the price of Bitcoin and ETH have gone up. Obviously, GBTC has gone up. Coinbase stock has gone up. I haven't looked at what's happening to the mining companies, but I assume their prices are shooting up as well because that's all they produce is Bitcoin. And if the value of what they produce goes up, then their revenues and their profits go up.
I think Marathon Digital today was up crazy as well. I think it was something like 30%.
Right. I assume Marathon, I assume Riot Blockchain. I assume all those, their stock values have moved up significantly.
And one of the things that was brought up, and I'm glad you brought up Coinbase, because there's been a lot of conversation as well in why was Coinbase up, whatever it was, 14, 15% potentially at one point today. Is Coinbase going to be a beneficiary? Yes, from a custodial perspective for the most part for a lot of these ETFs. But the question came to mind that if Coinbase is an exchange to be able to access crypto assets, and let's just stick with Bitcoin, right? So I want to go buy some Bitcoin, I would utilize my Coinbase account. If now there is an ETF available, I don't need to use Coinbase. I can just go use my standard Fidelity account or my E-Trade, my Schwab, whatever I want, and just go and buy the ETF like any other equity. So, do you think that these moves in places like Coinbase make sense, or is that just froth in this market?
I I think, I mean, that's one way to look at it, and I'm sure those that analyze Coinbase are going, okay, how much is a spot ETF going to negatively impact the people that would normally go to Coinbase and have to go through those transaction fees? I think you and I have talked recently, though, about how the amount of revenue, the percentage of revenue that Coinbase has gotten from transaction fees has started to go down because so many other services and products that they offer are where they're making more of their money. We talked about ETH staking at one point, or other crypto asset staking as a way that they're making money. They launched a layer 2 on top of Ethereum a couple of weeks ago, and the growth there has been tremendous. We're still not sure how they're going to monetize that, but the value they're building there is tremendous. And they have huge, custodial applications. So as the price of Bitcoin goes up, you're going to see more institutions that want to hold Bitcoin, and they might be using Coinbase custody, Coinbase institutional to hold that, in which case they pay a huge amount more in fees than what's generated when you and I go take our measly $100 or $200 and go buy Bitcoin. Right. When you get an institution that's going to custody 5 million, 10 million, $20 million worth of Bitcoin with them, that's a tremendous amount more. And if they're charging an AUM basis, they're charging based on the amount of money, and all of a sudden the price of Bitcoin doubles, their AUM doubles all of a sudden.
Well, and we're not talking about dollars and pence or thousands here. We're talking about the establishment of ETFs, which will have, the underlying ETF creator will have to go and purchase an immense amount of Bitcoin themselves as well,
Right.
to have as their underlying asset there. So, the chances are Coinbase will obviously be getting involved in that side as well. And as you say, the AUM they'll be held under the custody agreement is one side of it, but then there's the access trading side as well. So, they're winning on multiple sides. I think it's a good looking, interesting story for them. Who knows whether the numbers make sense? I'm not an analyst. I don't claim to be. I just think it's kind of a compelling story for the stock. But
Right.
that also ties into what we talked about last week as well, with the USDC agreement that they had with Circle. So they've got revenue streams that they are starting to tap into left, right, and center, which is great.
Exactly. And so last week we talked about them with Circle and their investment in Circle, such that they get to participate in the growth and what Circle is doing, and how, as we talked about, Circle has billions of dollars that they're getting to invest in treasuries and such, and they're just tremendous. They're generating a tremendous amount of revenue from that, a tremendous amount of profit, I guess, from that. And I think what Coinbase sees is more and more people that are not just investing, not just taking their dollars and converting them to Bitcoin to hold it and hope it goes up in value, but they're converting it to stable coins because they want to transact elsewhere in the world without utilizing banks. And I can tell you just an anecdote, Mehdi, from the office where I am. I walked by two guys that were hanging out here the other day, and I heard them talking about their Coinbase account and their Coinbase wallet. And of course that, perked up my ears, and I started listening to them. I'm not listening like I'm eavesdropping. I said, hey, I heard you mention Coinbase. What do you guys do? And they had very little knowledge of crypto, but they said they have a vendor whose bank decided to shut down their account with no notice for no good reason. And these guys had to pay their vendor. So what did they do? They went and bought USDC on Coinbase and sent it to their vendor's wallet. And that's how they went and paid. And when, like we're utilizing crypto to find ways around the banks when the banks do things we don't like, right? And things we don't like are shut down accounts, or charge us too much, or take too long to process payments.
That's it's what you've always been talking about, the real world applications for all of this. So it's actually nice to see an anecdotal story from your new office group. And I'm sure you went and grabbed a couple of cocktails with them afterwards to discuss how they could learn more from one of your courses.
Oh, of course. I'm always happy to teach folks that are hanging around wanting to learn about crypto.
Interaxis.io, check it out.
Okay.
So Adam, obviously this is an ongoing story, which we're going to see a lot of development over the several months, years, who knows. But there's 45 days, I believe, for the SEC to come back with an answer. then there's another 45 days for an action that they can go back and forth on. So, this isn't a tomorrow thing, but it's very interesting to see the moves that we're seeing happen right now. So it's all very exciting.
It is, and one more quick point, Mehdi. Remember, you have so many of these other ETF applications that are waiting for either approval or pushing down the road, delaying or whatever. And what you wonder is, now is the SEC going to go, okay, well, we've exhausted our real reasons for denial of applications. We don't really have any anymore, right? So when BlackRock is in the building and ARK is in the building with these applications, now what are they going to use to deny? Because they have to come up with something different. They've been using the same responses for years and years and years, and now they're going to have to come up with something different. And maybe they go, look, it's not worth it anymore. Now, the one negative I could see, the one denial they could say maybe is custody. They could come to custody and go, look, we don't approve of the custodians you're going to use. So if you need to reapply and come up with better custodians. That might be a response. But with all these applications in there, and again, with the names like BlackRock and Fidelity that are in there, is it going to be worth it for the SEC to try to come up with new reasons, knowing full well that they keep losing cases? And Fidelity and BlackRock and whomever, if they get denied, they're going straight to court.
Yeah, there won't be a slowdown in that. That will be a very quick turn to court.
Right.
So, Adam, we also, while we're talking about crypto assets and such, we've there was also another story that came out about Circle teaming up with Mercado Pago to introduce USDC to Chilean customers, not Chile as in cold, but Chilean as in the people. This is again small progress, and it's nice to see Chile get involved in the USDC side.
Oh, right, and we know that Latin America is one of the places where crypto is needed. It is adopted so much more, and this is not people speculating on crypto assets. This is people, especially in Chile and Argentina and other places, where they use DAI and USDC. They use stable coins because their currency keeps getting devalued so quickly that they need to use something that looks and feels like a dollar. So this is Circle partnering with Mercado Pago, which is one of the largest fintech company in Latin America, to bring USDC, to bring a crypto asset that looks like and feels like a dollar to the Chilean markets. There's people whose currency has been devalued who want to transact in dollars, but can't necessarily transact in dollars through their banks. So now they're going to get to transact in USDC through Mercado Pago. I think that's really important because that goes to what we we're just talking about, the use cases, right? When we go to Coinbase, investing in Circle, that goes to the use cases around stable coins, around blockchain technology. And this is people elsewhere in the world, right? In the US, we're very spoiled, but elsewhere in the world, they really want to use dollars. And when they can't get dollars, they'll use something that looks a lot like it. And a US dollar coin is a digital representation of a dollar that's sitting in custody somewhere.
And I'm sure everyone's aware of it, but I saw another headline today about Argentina, how their inflation rate went up something like 10% overnight, just based on the data and the analytics that was coming through. So that basically their currency is just getting devalued double digits on a daily basis, and taking the Chilean economy, similar, not quite as extreme, but these things are happening on a very aggressive basis, and to be able to pay your income and your wealth to the US dollar one way or another in a non-traditional way because you can't get access to dollars. This is a really, really good and safe alternative, or safer alternative, for these people.
Exactly. And we've talked about it all the time, the use cases. This is why Bitcoin was created. This is why crypto assets were created, for just this purpose. It's so that governments and banks didn't get to completely, run roughshod over all of us. And I don't say that to be all, foil hat and conspiracy theorists, but that's what happens in Argentina, right? That's when you get 100% annual inflation on a regular basis. That is not good for the people. And those people are demanding something that looks and feels like a dollar. They don't want necessarily Bitcoin. They don't care. They just want something that's going to hold its value much more so than their own currency. And now that's what we're seeing in Chile. And for those, outside the US, even for those inside the US, if you don't think that is going to pick up steam, if you don't think that is going to be a great use case for crypto assets overall, again, whether it's Bitcoin or ETH or USDC or DAI or some other stablecoin, Tether, PayPal USD, whatever it might be, that is such a great use case for it. The ability for people and elsewhere in the world to kind of give the middle finger to their government and say, look, we would rather transact in dollars. If you aren't going to give us the ability to transact in dollars or something stable through our own banks, we're going to find a way to do it. And crypto has given them that ability to do it. And that's what's going to drive the value of the different crypto networks like Ethereum, is those kinds of use cases. When more people in Chile and Argentina and elsewhere in the world are transacting in stable coins on the Ethereum blockchain or on the Avalanche blockchain or some others, that's what's going to drive the value of those of the tokens that represent those change, like ETH.
So, Adam, I know we're coming close to wrapping, but before we do, while we're on the topic of stablecoins, I know we discussed a couple of weeks ago how PayPal had launched its own stablecoin. How is this going? Are they rushing it? Has it been a little bit slow on the uptake? I'm not hearing much about it at this point.
No, it's been pretty bad. There has not been much uptake, which of course, especially crypto people are kind of going, see, we told you, or look, what a flop this has been. I think it's one of those things that just needs to take time. Look, stablecoin adoption right now, other than places like Chile, is actually declining right now because people are just not sure what to make of it yet. They're not sure what the technology is yet. They're not sure how to use it. They don't feel they haven't been educated quite enough about it to keep it safe. So I think we're just going to have to be a little bit patient. Again, I feel like PayPal took a long time to delve into this. What you're going to have to see is more people on the PayPal network, I guess, transacting, you choosing to utilize PayPal USD versus using dollars or using some other fiat currency that they might want to use. Once you see that in this kind of slow adoption of PayPal USD DC or PayPal USD, and then the ability to take that off of that account and move it into a wallet, then we're going to see some adoption pickup. I didn't expect it to all of a sudden be, hundreds of millions of dollars of people using the PayPal stablecoin right away. I think for me, the excitement is a company like PayPal realizing that this is viable. This is a viable threat to their business unless they actually use it and adopt it. And look, if this experiment shows PayPal shouldn't issue their own, and maybe they start using USDC or they start using some other stablecoin, then so be it. Right? Maybe they're going to learn from it. We're all going to learn from it. We're learning in real time. But I think the experiment is still viable. And I think we're just going to have a little patience and not expect that it's going to be like we've seen in the past with DeFi projects, where all of a sudden it goes from zero to, $100 million overnight. That's not what this was intended to do.
What do you expect? Yeah, I completely agree with you. I think that it's fantastic that PayPal is actually doing this experiment because it does show that it's not that they're accepting the technology. So
exactly, and again, that's what the technology is there for. It's there to facilitate transactions, payments anywhere in the world, anytime, for a relatively low cost. That's the whole purpose of it. We're seeing it in Chile and Argentina. We're seeing with PayPal and all those people that have PayPal accounts that now are going to have that option. We just have to wait for it to filter through and take that time for people to realize they have that option and understand how to use it.
Well, Adam, it's been a quiet August for the most part, but what a way to wrap up August, and lots to look forward to over the next couple of months. So we'll be here. Adam, as always, thank you for sharing your thoughts and your time.
All right. Thank you, Mehdi.
I want to urge our viewers, as always, don't forget to check out Adam's course on digital assets and crypto education. The website is interaxis.io. You can see it right there. Of course, don't forget to subscribe to Your Finance TV as well, because we're here as well. Until next time, don't forget, tune into Crypto Revolution every week in, week out. We are here talking about crypto assets and everything around that universe. Until next time, good luck investing.